or purchased motor car from D Limited on the installment purchase system at rupees 1,80,000. First balance is how much? 1,44,000. Second balance is 96,000. Third balance is 48,000. Asset account data to high seller account D limit 1,80,000. Interest transfer to P&L account, profit and loss account data to interest account. This goes to first year. Hello my dear students, I am Dr. B.S. Subramanya, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Grade College, a Temple of Excellence, MYSURU. I am going to hand in this session Advanced Financial Accounting, second semester, Unit 2, Session 7, in favor of Accounting for Installment Purchase System. In the last session, I already explained what is installment system, what is the difference between hire purchase and installment system, what are the entries to be passed in the installment in the books of the hire purchaser, in the books of the hire seller. Common entries you have to make. Here, asset account data in the books of the installment purchaser, asset account data, installment interest suspense account data to installment seller account, down payment, we have got installment seller account data to bank account, then we have got interest account data to interest suspense account, first installment paid, installment seller account data to bank account, then depreciation account data to asset account, transfer entry, profit and loss account data to depreciation account to interest account. Just entry, profit and loss account data to interest account to division. So it goes on the remaining years. Here we can follow that. On 1/1/2008, R purchased motor car from D Limited on the installment purchase system at rupees 1,80,000. The price of which was payable as 36,000 down payment. For 1,80,000, 36,000 has been paid. Balance in 3 equal annual installment together with interest plus interest 10%. Division was to be provided at 15% per annum on straight line method, means depreciation remain constant. At the end of the third year, the motor car was sold for rupees 1 lakh. Show motor car account and seller's account in the books of the buyer and necessary journal entry in the books of the seller. What is the cost price? Cost 1,80,000 minus down payment how much down payment is made now? 36,000. Deduct 1,44,000. So the balance, this is your balance. 1 lakh for in how many installment? Divided by 3. So 1,44,000. 1,44,000 divided by 3 is equal to 48,000 each installment cost price. Every installment he has to pay 48,000 plus interest, 48,000 plus interest, 48,000 plus interest. What's the total cost price? 1,80,000. How much down payment? 36,000. Balance is 1,44,000 divided by 3 is 48,000. Every year he pays 48,000 plus interest, 48,000 plus interest. But here motor car was sold at the end of the 3 years. The motor car was sold for rupees 1 lakh. I will show how to do in the ledger account. Come back here. Calculation of interest. On 1/1/2008, the cost is 1,80,000. How much down payment is made? 36,000 installment paid. No interest to this. This is down payment. So 36,000 is there. The balance is 1,44,000. At the end of the year, you are going to pay 48,000. What's the rate of interest? 10%, 14,400. 48,000 plus 14,400 become 62,400. This is installment paid. What's the actual cash paid? 48,000. Deduct 48,000. Balance is 96,000. On 96,000, 10% is 9,600. Every year, how much he pays? 48,000 plus 9,600. It becomes 57,600. 48,000 gone. At the third year, 48,000 he paid plus interest of 4,800. Totally he paid 52,800. So your installment money goes 2,08,800. Your interest paid is 28,800. Actually, cash price is 1,80,000. So 1,80,000 plus 28,800 become 2,08,800. This should be remembered. Every year, this 48,000 is constant plus interest on the outstanding balance. First balance is how much? 1,44,000. Second balance is 96,000. Third balance is 48,000. So this amount includes the interest. That's all. So interest is on outstanding balance 10%. Every year how much? 48 plus interest. 48,000 plus interest. 48,000 plus interest has to clear up in how many years? 3 years. So first down payment, this 36,000 does not contain any interest at all. Then every year, this is your installment, which includes the interest. Real cash price 48 plus 14,400, 62,400. Then 9,600, 57,600, 52,800. Then we'll move on. Ledger account in the name of R, motor car account. Motor car account data to delimited seller. Asset account data to high seller account delimited 1,80,000. Depreciation 15%, 27,000. This is your depreciation 20. Balance is 1,53,000. Brought down the balance, brought down 1,53,000. 15% is 27,000. Brought down here, your balance carried down is 1,26,000. 1,26,000. By depreciation 27,000. 1,26,000 minus 27,000. It becomes 99,000. For 1,26,000, 27,000 gone. 1,26,000 minus 27,000. Difference is 99,000. Balance 1,26,000 minus 27 is 97,000. It has been sold for 1 lakh. Profit and loss account. This is nothing but profit. At the end of the third year, the balance brought down is 1,26,000. By division 27,000, balance is 99,000. It has been sold for by cash, sold 1 lakh at a profit of rupees 1,000. So I will repeat. Motor car account data to delimited 1,80,000. By division 27,000. If we deduct, it becomes 1,53,000. Brought down 1,53,000. Depreciation, this is 27,000. Balance is 1,26,000. Brought down 1,26,000. By depreciation, 1,27,000. The balance carried would have been the 99,000, but it has been sold now for rupees 1 lakh at a profit of 1,000. Then move on. Delimited. Motor car account data to delimited account. Delimited account data to cash account down payment. Interest of that year. Interest expense account 28,800. Delimited. Due cash account first installment paid 62,400. Balance is 1,10,400. Brought down 1,10,400. Due cash account second installment paid 57,600. Balance carried down is 52,800. Brought down by balance brought down 52,800. Third installment paid 52,800. I will repeat. Asset account data interest suspense account data to installment seller account. 1,80,000 total interest is 28,800. How much down payment? 36,000. First installment 62,400. Balance carried on is 1,10,400. Brought down 1,10,400. Cash paid, second installment 57,600. Carried down is 52,800. Third year brought down is 52,800. To cash, third installment paid 52,800. Then, so journal entry in the books of delimited on 1/1/2008, purchaser or account debtor 2,08,800, to interest suspense account 28,800, to sales account 1,80,000, being sale of motor car on installment system. How much cash received? 36,000. Cash account debtor to R account, being down payment made. Then on 31st December, interest suspense account debtor to interest account. This is the interest transferred from interest suspense account. First installment. Then cash account debtor to R account, being first installment received. Then interest transfer to P&L account, profit and loss account debtor to interest account. This goes to first year. Second year starts from interest account, interest suspense account debtor to interest account, be interest transfer from interest suspense account. Then we receive cash account debtor to R account, being second installment received. Then transfer entry, profit and loss account debtor to interest account, being interest transferred to profit and loss account. So that goes in favor of second year. Third year, interest suspense account debtor to interest account. This goes in favor of third year. Then cash account debtor to R account 52,800. Transfer entry, profit and loss account debtor to interest account. These are all the entries we have done. I think we pass in the books of the year. This is in the books of the purchase seller. You have done the one ledger account, one journal entry. Who purchases? You see that here, especially journal entries in the books of here in journal entry. Delimited is a seller. He says hire purchaser account debtor to sales account to interest account. So purchaser become the debtor and we receive from the purchaser. Interest suspense account is debited. Now every year interest will be transferred from interest suspense account debtor to interest account. That you have to learn. So first entry, asset account debtor to sales account to interest suspense account, or asset account debtor to interest suspense account to sales account to receive the down payment, cash account debtor to installment purchaser account. Then interest suspense account debtor to interest account to receive the first installment, cash account debtor to installment purchaser account, transfer to P&L account, profit and loss account debtor to interest account. Second year, interest suspense account debtor to interest account. Then he received the second installment, cash account debtor to R account, and interest will be transferred to profit and loss account. Hope you understand. I have prepared the ledger and how to calculate the interest I have shown you, and how to journal entry has to be passed. You learn the journal entry. According to the journal entry, ledger is prepared. Hope you understand. We have done everything here. Journal entry also done. Ledger is also done. This will be asked for 10 marks. 1 15 marks hire purchase, 1 10 marks installment system. Difference between hire purchase and installment, general question they will ask. So I have shown you what differences between the hire purchase and installment system in the last session, and every detail is there. I also told you what is actually in installment. Goods passes from installment seller to installment purchaser on the date of signing the contract. Along with the goods passes, even the legal ownership will be transferred from installment seller to installment purchaser. If the installment purchaser fails to any one of the installment, he cannot take back the goods. He can go to a court of law and claim the whatever he has to receive the amount. Who will claim? Seller will claim on the buyer. So he is a defaulter. He has to pay. He will go to a court of law against the purchaser. But in the case of hire purchase system, it is not so. So goods passes from hire seller to hire purchaser. Hire seller is the owner till the last installment is paid. Once the last installment is paid, then only the hire purchaser become the legal owner of the goods. So till who is the owner? Hire seller is the owner. But in installment system, it is not so. At the time of delivery, goods passes from seller to the purchaser, installment seller to the installment purchaser. Once you don't pay the down payment, along with the goods, the legal ownership will be transferred from installment seller to installment purchaser. If the purchaser fails to pay any one of the installment, he cannot take back the goods. He can sue the installment purchaser in the court of law. So this is the case of the installment system. Generally, they will ask for 10 months. So 15 months for hire purchase, 10 months for installment system. Hope you understand. We'll meet in the next session with new chapter called royalty. Till then, goodbye. Meet in the next session.